So today we are going to another limb of indirect taxes. Welcome CA Pooja Madam to the session. Your session, Madam.
So you're not showing regarding RPL, sir?
Madam?
RPL course, subject.
No, you can continue, no problem.
Okay, sir. Good morning to all. So today we'll be completing indirect tax, and the last part is customs. Okay. So when you hear the word custom, what comes in your mind?
Customs.
Yes. Yes, sir. Customs. Duty. Just import and export. Goods and import and export. Yes. So, so customs is charging the duty on my exports and my imports. Yes. Okay. At specified rate. At specified rate. So, and the provisions apply. Okay. When does the what exported goods, what no, known to be domestic goods? When does the exported goods until the clearance at custom, the goods are known as exported goods. Once it is cleared for domestic use, it will be classified as domestic goods. So imported goods can be even for the trade purpose and even the capital goods also. So yes, for manufacturing and capital goods. So my charging section under Customs Act is Section 12, where custom duties are levied on the goods imported and exported from India at the rates specified and the provisions to apply to the government goods also. Okay. If the goods imported from the end of the government also, even though that will, provisions will be applied. So first, taxable event. When does taxable event occurs? In the case of import, goods cleared for the home consumption. So the when the goods reach the custom barriers and the bill of entry for the home consumption. So at when the bill of entry has been prepared and cleared for the home consumption, in that case, okay, in that case, the goods are what known for utilization. Okay, if goods are warehoused, okay, custom barriers would be crossed when the goods sought to be taken out of the customs and brought to the mass of goods in country. Okay, so one example: if my invoice value is $200, okay, at the time of bill of entry the rate was 70 rupees. Okay, when after 2 days, when I went next day at bin for clearance, the price has been increased. So at what price my I'll be calculating my assessing value? At what rate? At what rate? 71. How? Already bill of entry has been created, right? Entry for the goods. Yes, 70 rupees. Yes. So even if you go after 1 day, the calculation will be on the price at 70. Whereas if the goods has been warehoused, what about the goods has been warehoused? 71. Yes, whichever is later. Yes. So in case of export, okay, leaving the our territorial areas, when goods cross territorial area, that is 200 nautical miles, when the goods cross our territorial waterways. So goods can be exported in how many ways? So whether import or export can be done by waterways, then airways, next landways, land route. So in waterways via vessels and ships, aircraft, your vehicle. So who is the person in charge? Who will have the control on the goods? For airways, who will have the control on the goods? Sorry, waterways. So who is the agent in customs? I'm asking for waterways. Who is person in charge? Who will have the control over the goods? Customer officer. Master of vessel or ship. Still, it's in the transportation. Captain, yes, master. What about aircraft? Aircraft, yes. Then what about vehicle? Vehicle is drive. So if anything happens, any theft, damages to the goods happen, the person in charge will be liable, okay, for the reasons thereon, not the custom person. Then next, how do we determine the rate of duty and tariff value of the input? Okay, the goods entered for the home consumption. So that is the date of presentation of bill of entry or the date of entry inward of the vessel arrival of the aircraft or vehicle, whichever is later. Okay, where goods are cleared for a home consumption from warehouse. From warehouse, date on which of a bill of entry for consumption in respect of such goods have been presented. Okay. So at the time of clearance from the warehouse, the bill of entry, when it is what entered for the home consumption, that time it is the date and the value. Any other goods, so date of payment of duty. So what are the features of import? So import means either you can import is bringing in the goods bringing into India from outside. Imported goods means the goods brought into India from place outside India, but does not include the goods which have been cleared for the home consumption. Okay, even though the whatever the goods which have been cleared for home consumption, okay, so that does not include, okay, so only from the goods which has been imported, so until the clearance from the custom, okay, is still that time it is known as imported goods. Okay, goods. What type of goods includes vessels, aircraft, vehicles, and which is not a conveyance, which is not used for the transportation. Okay, okay. The or stores, baggage, currency, negotiable instrument, or any other kind of movable property. So in India includes the territorial waters extends to 12 nautical miles from baseline, and imports is said to be commenced when the goods enter into territorial waterways and shall be completed when the goods become part of mass of the goods within. So a area up to 200 nautical miles from the baseline is called as Indian Exclusive Economic Zone. Custom authority can exercise such arrest, etc. power till the 200 nautical miles. Okay. Thus, all goods crossing territorial waters may not attract levy, okay, of the customs, as crossing of the territorial waterways is only the commencement. Some illustrations where goods cross the territorial waterways, but duties will not be levied. So that is where pilferage has happened, even though it has crossed the what 200 nautical miles or 12 nautical miles, custom duties, pilferage, loss of goods, cancellation of duty, damages, theft. In those cases, custom duty won't be applicable. Okay. The liability of the to pay the custom duty shall arise only at the time of filing of bill of entry for home consumption. Uh, Then, in case of export, so anything which has been exported, okay, which crosses 12 nautical miles, okay, in that case, the goods are called export goods. So, as discussed, conveyance will include vessels, aircraft, vehicle, okay, whereas person, master of vehicle, commander, driver, conductor, guard, or other person having the chief direction of the train. So few illustrations. Okay. So determination of rate of duty. So when does the rate of duty can be valued, and the tariff valuation, okay, where goods cleared for home consumption, okay, if your invoice example is of 71 what 7700 US dollars, but conversion rate as of what date of entry is 65, sorry, date of invoice, and my bill of entry, bill of bill of entry was 67. Made the payment when it was 62. So at what price I need to pay? What would be my assessing value? Yes, when it has cleared for home consumption, 67 rupees. The bill of entry date or entry inward date, whichever is later, 67. So, if goods cleared for warehousing, presentation of X bond bill of entry. Okay, export of goods, let the exporter order the baggage at the time of baggage declaration. Okay, on spot rate. Okay, if on postal base, the presentation of list of goods to the proper officer or arrival of the vessel, whichever is later. Okay. Then export by postal mode. Exporter delivers the goods to the postal authority. Okay. Then in any other case, date of payment of duty. Okay. So here my conditions. So re-imported of goods. So the whatever the goods had been imported, so those goods has been re-imported. In which cases can I re-import the goods? One illustration for re-import. Repair, yes, repair. Any one another re-import. Only maintenance. Almost repair only. Yes, job work. I've send the materials from India, so re-imported. Yes, re-import of goods exported under a duty drawback, exported for the repair, etc. At concessional duty payable. So the goods which has been exported, okay, and under a claim of duty drawback, if I have claimed any duty drawback or refund or under the bond without any payment. So I know that the whatever the goods has been exported will be imported within the time limit of 6 months or 1 month. So sorry, 1 year. In such case, okay, I'll submit an bond and I'll not pay any duty without payment of integrated duty under the duty exemption scheme. Okay, in these cases, okay, what will be the my import liability? The amount of import duty will be amount of incentives availed at the time of export. See, whatever the duty drawbacks, incentives or refund claim, that amount will be there. Okay, the amount of IGST compensation in case of point 4. The amount of IGST compensation cess leviable at the time of place of import of goods subject to the specified conditions. Okay, whatever the incentives, incentives received, okay, at the time of export, that much amount will be qualified for the liability to be paid. Normal was the example that in case of GST. So whatever you have sent for as free sample, etc. In such case, my cost of raw materials will be reversed, right? So input credit on cost of raw material. Similarly, in the case of customs, whatever the duties or refund incentives claimed at the time of export, those items will be reversed or should be paid to the government. Okay. Any other goods falling? So either when you're not claiming any exemptions, incentives, refunds, in such case, the duty of custom will be the basic custom duty and IGST and GST cess on the fair value of the cost of repair. Okay. Even though there is an insurance coverage and or a warranty and the cost of repair is zero, in such case also the market price, the fair price of the repair, if the insurance, if the as if there was no insurance or a warranty coverage on such item, will calculate the custom duty. So that will be the fair cost of the goods, okay, including the cost of material actually incurred, okay, or not in repair, and the insurance and freight charges both ways, and the custom duties. Okay, any others, okay, goods other than the 1 and 2, the custom duty will be nil. So next, can you just say what would be example for this? goods other than sent for repair. One example where we don't pay custom duty. No, no, not marine insurance. Insurance means the insurance on capital goods. Insurance on capital goods. So if it's an heavy the goods which have more capital cost is huge, they can take an insurance on that capital goods. Example, medical equipments, manufacturing goods, where you're using a latest technology. There was a small error. Okay. So example, the robots, where one example, uh, I had worked in one hospital where they imported the robots, okay, which cost worth of 20 CR, okay, from German. From German, they imported the robots. Okay. In that robots, they had the small, what you say, cutting machines, small, where that robots were specialized in knee surgery. Okay. In that small defects where the technology, okay, where as per the reports, they need to inbuilt, they need to scan the reports such as the that X-ray reports, all, and you need to see the where the what the knee surgery to be happened. Okay, kneecap to be placed. Okay, the small error was it was taking 1 centimeter additional. Okay, while cutting the caps. For that, they exported the item for repair. Okay. If the repair cost, if there was no warranty, I'll say. So if it cost me again the additional of 4 CR, I'm liable to pay, right? No. So or any damages of the capital goods, fire or physical damage to the capital goods. In such case, insurance will be covered. Okay. The and even the if we have taken any bank loan, bank people make sure that insurance coverage for capital goods. It's an example. Okay. So in such case, so as if there was no warranty coverage for that, we calculated at 4 CR. The what assessing value on this custom duty was paid. Yeah, government uses goods. Government uses goods. Yes, government uses goods where custom duty is not paid. Example. Okay. Conditions to be satisfied for claiming of concessional exemption. Okay. So first is the time limit for re-input is 3 plus 2 years. So within 3 years, you need to import the goods. Okay. For claiming exemptions. Okay. I'm saying for exemption, where or either you will submit the bond, you will not pay the custom duty, or there is an exemption. Okay, where there you will make sure that you will be what re-importing the goods within specified period. The condition is you need to import the goods within 3 years and further extendable on an application within 2 years. Okay, in case goods are exported, okay, under the advanced AA or EPCG or DPB, etc., further 1 year is extendable. Okay, total 6 years we have. Okay, same goods. So whatever the goods has been exported, the same goods should be returned with some minor repairs. Okay, in that ownership has not been changed. There is no title transfer of title. Such case exemption can be levied. Okay, on duty. Circumstances where goods manufactured and re-imported for the repairs, reconditioning other than the specified goods. Time limit is 3 years. Okay. Export to Nepal is 10 years. Okay. If re-exported, so whatever the goods has been imported, which is re-exported within 6 months. Okay. Extendable to 1 year. So on the ACDC on the application to ACDC satisfied that regard the identity of goods and execution of bonds. Or goods manufactured in India and re-imported for reprocessing, refining, or making any other similar process. So in that case, 1 year. Clear with that? So your assistant commissioner or deputy commissioner should be satisfied with the identity of the goods, and the title should not be transferred. Okay, if you're exporting, there should be an execution of bond. Okay, within the specified period. Then, so certain exemptions on pilferage. There is no duty paid on pilferage. Loss of goods. If imported goods after unloading, it has come to the customs. Okay, before the order for the clearance, before the what issuing of bill of entry, such case or depositing to warehouse. Okay, there was some pilferage, some loss of goods. Such cases, no duty will be payable. If whatever the goods lost, pilferages, if it's paid, what if it has been restored, then importer becomes liable to pay duty. Yes, small theft. And cancellation of duty, that is remission of duty on the goods lost, destroyed, abandoned. Suddenly the next day the goods became prohibited. If importer proves up to the satisfaction of ACDC, or imported goods are lost or destroyed at any time before the clearance for home consumption, duty is remitted. It's waiver. Right to relinquish the title to the goods abandoned. Okay. The owner of any imported goods may relinquish his title to the goods any time before the order for clearance of the goods for home consumption, or order for permitting to deposit for goods in the warehouse, not liable to pay duty. Okay, no relinquishment of title or goods regarding which an offense appears to have been committed. Clear? Next, when do we have abatement of damages on of duty on damage or deterioration of goods? Any imported goods before or during the unloading. Okay. Then next, any imported goods other than the warehouse goods. Other than the warehouse means it is clearing for the home consumption, right? Okay. By accident after unloading, but before examination of the assessment officer by custom authority, or any warehousing goods. Okay. By accident in warehouse before their actual clearance. In such case, provided such accident is not due to the willful or act negligence or default of the importer or his employees or the agent. Okay, where the amount of duty chargeable for abatement will be duty on goods before damage. First, we'll calculate the whatever the custom duty before the damage occur, before deterioration, then value of damage. what is the value, what is the goods value of damage, then the value of goods before damage is the formula for abatement. Yes, only value will change. Okay. Then the value of damage or deterioration is value ascertained by proper officer, the gross sale proceeds in the case of public auction. Okay. Or tender or any other manner. So clear with pilferage, damage and destroyed. In the case of damaged goods, at realizable value, the goods will be sold. So balance will be my damage. On that damage, the custom duty will be reduced. Okay, not the rate. The value will be reduced. And remission waiver if it has been destroyed before the clearance for the home consumption. Okay, and also like small theft, pilferage, small loss of the goods. In such case, no duty is paid. So when whatever the goods has been imported, which is used by more than one person, okay, in such case, okay, in such case, it will be calculated on the individual basis. So imported goods used from by more than one purpose, not person, more than one purpose, by denaturing the goods made unfit for the other purpose. Okay, after denaturing, goods can be used only for one purpose, and accordingly, duty will be laid. Okay, so converting that to be used for that particular purpose. In that case, accordingly, the rate will be fixed. So exemptions, whereas exemptions, as we discussed, the government can give a general exemption to the particular class of goods in order to, what not to give exemption, okay, on custom duties, whereas specific exemption to specific class of goods. So first, central government, in the interest of public, by notification in official gazette, exempt generally either or absolutely or conditional exemption. So if your example, it can be that that when you're importing the goods and at a large space, okay, or exporting the goods at large space, and where you have a less import, in such case also exemption can be allowed. The conditional exemption is valid up to 31st day of the March, falling immediately after 2 years from the date of such grant variation unless otherwise specified. Okay, whereas in special exemption, central government in the public interest by the way of special order in each case exempt from the duty of payment of duty only under the circumstance exceptional nature, no duty if the amount of duty leviable is equal or less than 100 rupees. So notification effective date are not mentioned. If the notification effective date is not mentioned, then the date will be issue of what issue of news or notification from central government to the for publication in official gazette, and exemption through a special order, date of issue, clarification issued within 1 year from the issue of the notification, retrospective effect for the any clarifications on notification. Yes. So what are the types of duties now? After VAT has been excluded, VAT and service tax, what are the what duties? Yes, protection first is my basic custom duty. Yes, social welfare duty is calculated on basic custom duty. Anti-dumping duty. Yeah, when more than 3% of the exports, more than 3% of the exports is done or dumping the items in what in India, like importing the goods, exporting to India. In such case, anti-dumping duty will be charged. That is directly on my CIF value. Excise duty. Certain item. Excise duty is not there now, sir. IGST, yes. IGST is calculated on my total of all. Yes. So types of duties in that first, my custom duty, basic custom duty, it is charged at 10%. IGST, where it is charged at not what which does not exceed 40%. I can based on the goods which has been imported. Okay, on such case, it varies either 12%, 18%, 28% as such. Okay. So in for computing accessible value, the first value determined under section 14, that is my CIF value, cost, insurance and freight inclusion, and the basic custom duty, then any other sum leviable under any law for the time being in force. Example, social welfare duty, okay, including all the what my value determined plus the duties, basic custom duty and social welfare or like any other values. Okay, on that basis, on that total amount, the IGST is calculated. Okay. In case where imported goods are liable to anti-dumping, okay, anti-dumping duty, the value for calculation also include anti-dumping duty. Clear? So in yes, clear. So what about safeguard duty? What is safeguard duty? Yes, what about safeguard duty? To protect, to protect domestic industry. Even though we have the items which are produced, manufactured in India, okay, but also we do import of goods, right? Based on the brands we will be purchasing. So in that case, to safeguard the domestic industries, The safeguard duty, that is even that you can call as anti-dumping duty, will be charged. Okay. Yeah, that that is the article from the developing country where the share of import is more than 3% of total imports of the, like of the country, of that country, whatever they export, where it is more than 3%. Okay, if we are importing the 5%, whether a single or all more than one of all, otherwise from other group of or other countries also including such case, safeguard duties are applicable. If the import is less than 3%, the question, if the import is less than 3%, then my safeguard duty is applicable. No, 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 no. When it is less than 3% of the import to India of a particular goods. Okay, it can be the import by Mr. A, Mr. B. Okay, altogether on national wise we calculate. Okay, when a certain goods where it is exported to other countries also, and then it when the import, I mean exporting to India is less than 3%, 3%, exempt, there is an exemption from safeguard duty. So how do we calculate anti safeguard? You will have a percentage safeguard duty. Okay, so in that in safeguard duty, you will be seeing at all over the at national wise what is the goods imported or particular goods. So, duty will be levied at the percentage. Okay, what then? Anti-dumping duty. So, in order to stock clearance, I'm doing the import, much imports in such way. In that cases, the duty will be calculated on the normal value in the market, in exporting market. Okay, then which is greater than the export price. So whatever the injury. So the duty will be the injury or has which has occurred or margin of anti-dumping amount. Okay. So another is social welfare surcharge. So social welfare surcharge, okay, rate is 10% levied and collected on the goods imported into India to safeguard the measures. The duties excluded. Okay, excluded, and countervailing duty, anti-dumping duty, and social welfare surcharge. And exempted is integrated tax and GST compensation. So basically, social welfare charges charged for on basic custom duty. Okay, it does not include any other what duties. Okay, while calculating the BCD. So the safeguard duty, and central government will have power, okay, to impose, okay, conditions. The goods may or may not be specified in my second schedule on necessary circumstances. Okay, when the see when to enhance the exports, whether you have done the exports or no, the condition can be levied. Whereas the enhanced or the import duties, in that the what the event should have been happened. The central government empowered by amendment to first schedule by notification condition. Good. should be specified in my first list, and necessary circumstances existence. Whereas in my export, it may not be necessarily existence. Okay, but and the goods maybe or may not be listed in my second schedule. But here in import, it should be listed in my first schedule, whether to impose or enhance the import duties. So anti-dumping charges, where your normal value in the exporting market is more than the export price. Okay, so computation of anti-dumping duty. Anti-dumping duty, lower of the following: injury of margin or margin of the margin of the dumping. Huh? So margin of dumping is normal price minus exported price. That will be the injury, which will be charged as anti-dumping charges. So this is the what computation statement, where you'll first find the assessable value on that. Basic custom duty is charged on basic custom duty. Social welfare value is calculated on the total of all IGST is calculated. So this amount will be the payable of custom duty. That is all BCD, social welfare charges, and IGST together, all three amounts to custom duty payable. So compensation cess. GST compensation cess. The GST compensation cess levied on inter or intra-state supply of goods or services to provide the compensation, to state for loss of revenue due to GST implementation. So when you're importing the items, you're charging straight away the IGST, right? There is no intrastate component. Okay, since there is a loss of revenue to the state, so GST compensation stress will be added. Applicable only on the goods or services notified by central government. Currently levied on luxury and skin goods, like sin goods. Okay, like pan masala, tobaccos, etc. Okay. What about agriculture infrastructure development cess on import of certain items? Okay, there is a levied on import on specified goods at the notified rate. That is like import of apples, kabuli, chenna, urea. So certain notified goods on that, which is agricultural infrastructure and development cess will be added. Either one of the cess will be added on the import of certain items. So can we calculate the custom duty? Please calculate the custom duty. Clear with valuation, right? So now, can we calculate the custom duty of the above question? A machine was originally imported from Japan for 250 lakhs in July on the payment of all duties of customs. The said machine was exported back to the supplier for repair, re-import. So what conditions? First conditions, re-import. I should import within 3 years. Okay, in the December, they re-imported without any remanufacturing or reprocessing. Okay, there was no change in the material article goods. Whatever the goods has been sent, say similar way it has been returned in the October next year after repair. Since the machine was under warranty period, please take into consideration under a warranty period. Under a warranty period, warranty period, the repair were carried out of free of cost, since it was a warranty period free of cost. However, the fair cost carried out, including the cost of material, was 6 lakhs. Means would have been rupees 9 lakhs. Okay, so my cost of material 6 lakhs and the labor cost is 3 lakhs, total 9 lakhs. Plus actual insurance and freight charges were 3 lakhs. The rate of basic custom duty is 10%. Integrated tax is 12%. Ignore all the GST compensation. What would be the custom duty? Contravailing duty and special addition duty. It will be levied only on the special notifications. So before, before the GST, we used to calculate custom duty on that base, contravailing duty and special additional duty. Okay, where it has been what merged after GST. So first custom duty, and then we are calculating safeguarding welfare, social welfare duty. That is nothing but a special additional duty I'm leaving, right? The next IGST, right? IGST, the contravailing duty. Instead of CVD SAD, which was levied before 2017. Okay, not sorry, before 1st July. 1st July, GST came into effect. Before that, CVD and SAD was in place. Nil. Oh, nil, nil. How it is nil? You may you may get one question at least on this. So my first point is it has been, see, the goods has been exported and has been re-imported, right? Within, I'm assuming the goods has been re-imported within 3 years. Repair. No, no, no. None of them. So my first condition for re-importing that the goods should be re-imported. I should have made the application to ACDC and they have the clarity and the title has not been transferred, okay, within 3 years. Okay. This is my assumption. Okay. The next, the value, at what value you have taken. And I told fair value. Yes. Yes. My first condition is the goods should be re-imported within 3 years and there is no change. There is no change in the goods, only for reconditioning, fabricating, right? And the identity of goods has not been changed. Such case, yeah, other than the goods, okay, whatever the exemptions, sent for repair, I've exported and now it has coming importing. The duty of customs will be on the fair value of the repair. Fair value includes my labor and material. Fair value. Even though I have a warranty or an insurance coverage, okay, I will pay on the fair value as if there is no warranty. Okay, that will be the my value. Okay, then for the calculation of duty on such value, my what duties, my basic custom duty IGST will be charged. Clear? So my question my question tells me originally I had imported the goods were worth of 250 lakhs. Okay. Now I'm exporting the goods. Okay. There was a small repair work or something where the production cannot be done at large scale. In such case, I have exported the certain specified goods and it has been imported. And it is covering in the warranty period where my fair cost of repair carrying out is 9 lakhs. 9 lakhs. My insurance and freight amounts to 3 lakhs. Total is 12 lakhs. Right? Yes or no? My BCD, basic custom duty at 10%, that is 1.2 lakhs. Then, so ignore GST compensation. So next is next at what price I'll be calculating my GST? For to calculate my GST, it will come 1 lakh, sorry, 13 lakhs. So IGST at 12% is 1,59,000. So 840. So my total custom duty, sorry, custom duty is 1.2 lakhs plus 1,59,840. Answer is 2,91,840. Clear with this? 2 lakh. So 13 lakh does not come. See, am I paying the repair cost? No. I'm asking the custom duty what to be clear. That's it. The answer is one second. So my first condition is goods must be imported within 3 years. The goods has been imported within 3 years. Yes. The goods must be the same. Whatever the goods which has been exported, same goods should be imported and the ownership is not changed. In such case, even though you have the warranty for the calculation of duty, you need to take a fair repair cost, where my repair cost includes 9 lakhs. 9 lakhs is my cost of material plus labor. Okay, then additional 3 lakhs. 3 lakhs is my freight and insurance in my question. 9 lakhs and 3 lakhs. 3 lakhs is my freight charges, insurance and freight charges. Okay, so the total is 12 lakhs. On total, charging custom duty 10%. The next, sorry, 10%. Then social welfare duty. Social welfare duty is charged on custom duty, that is 10%. My total is 13 lakhs 32,000. The next is calculation. IGST will be calculated on total. Then custom duty is 2,91,840. 2,91,000. Social welfare. Sorry, I skipped that. 2,91,840. Clear? See, small sum you may get even as an MCQ or a descriptive question also. So my question number 2. Every time safeguard duty is not charged, only in a specific cases safeguard duty is charged. Answer for question number 2. Answer. Then how? Sorry. Question number 2. Determine the custom duty payable under Customs Act, including the safeguard duty. Why safeguard duty is levied? when when you are when you are importing more than 3%, right? In such case, safeguard duty will be levied. If it's the import is less than 3%, okay, compared to all over world, such case it is exempt from safeguard duty. 3%. So where here I am importing more than 3%, that is 4%. So my basic custom duty BCD is at 10%. So 30 lakhs, 10% is 3 lakhs. Next, what I'm saying, there is an inclusion of safeguard duty, okay, under the section. So when you are importing certain notified items, such case safeguard duty can be levied by the customs unless your share, unless the country share is more than 3%. The share of import of sodium nitrate from the developing country against the import of the sodium nitrate to India is 4%. Such case, what safeguard duty? Safeguard duty is charged at 30%. Clear with the condition? So 30% is on my 30 lakhs direct, not on my customs. Okay, 9 lakhs. The next, social welfare duty, which is calculated on my BCD. So that is at 10%. So social welfare duty is of 30,000. What is my total value? Total value is 42 lakhs 30,000. Right. to calculate the IGST. IGST, okay. IGST at the rate of 12%. So straight away charged on total value. So amounts to 5,07,600. Okay. So what all will be my custom duty? Custom duty will be my basic custom duty, safeguard duty, social welfare duty, and my IGST. Okay. For the purpose of calculating IGST total value, there will be inclusion of assessable value. Okay. So the custom duty amounts to 17 lakhs 37,600. Clear with this? No, 47 assessable value. But transaction value I'll be paying to the vendor, right? 30 lakhs will be paid to the vendor, not the custom. 13 lakhs to be paid to the custom class as a custom duty. See, for assessing the value, 30 lakhs is taken. The goods, this won't be included with the duty. See, when your share is more than 3%, this applicable. Clear? Clear with this question where safeguard duty? So safeguard duty is that duty when you are importing any items from developing countries, which is more than 3%, which is more than 3%. In such case, safeguard duty is applicable only for the notified goods, particular items. So in general, can you just say why the branded clothes cost is higher? Say if you go for Louis Phillips, okay, Louis Phillips, the cost of cloth is higher than Raymond's. Why? They'll give. So how to know whether safeguard duty is more means? See, this is a condition, general condition. If it's less than 3%, there is an exemption. Okay. So as given in the question, yes. Name and quality. See, even Raymond's also have a good quality. Or any other Indian brands also has a good quality, right? Arvind Fashions also, Arvind Collections also have a good quality. Example, where when you're importing the goods, we are levying the duty, right? Import of raw materials. Yes, to safeguard the Indian industry. Again, Make in India, we have got to safeguard the industries, right? So when I'm dumping all the collections, example I'm saying, when I'm dumping all the branded items, branded clothing in India, such way the government may impose on that clothing, okay, particular clothing, the what safeguard duty or anti-dumping duty. Anti-dumping duty where the injury has been occurred for the particular set of sectors. So if you're getting that 500 rupees, but you're charging, okay, lesser than that item, China items, where cost is very less than Indian item, their anti-dumping duty is applicable. To Government of India, I'm to Government of India. The example I told, okay. If you assume the Louis Phillips, just it came in mind, okay. Um, Next, Next question. Please calculate the accessible value. You may get this type of question in either in MCQ or descriptive, like problem solving. From the particulars given below, find the accessible value of the imported goods. The cost of machinery at the factory of the exporter. Okay, it is $10,000. The transportation charges 500 and handling charges paid for loading the machinery is $50. Buying commission paid by the importer $50. Freight charges from the exporting country to India $1,000. Exchange rate is 70 rupees per dollar. Actual insurance charge paid was not ascertainable. In case the actual insurance charge which is not ascertainable, such case need to calculate on the cost at 1.125%. And my freight on transportation should not exceed 20%. Should not exceed 20%. Calculate the accessible value. Accessible value will be my CIF. Cost plus insurance plus freight. CIF value while importing the goods. Answer. What's my accessible value? It's like 12,000. You're near to the answer. I'm not asking custom duty. I'm asking the accessible value. Wrong, wrong. When you're assessing, you need to charge an import. You'll be charging on INR, not on USD. No, answer is wrong. 8 lakh 17 is wrong. 7 lakhs 35 is wrong. Accessible value. Wrong, wrong, sir. What about insurance? I've told insurance is not ascertainable. When the insurance is not ascertainable for assessing value, insurance will be calculated, right? No, no, no. Uh, So first is cost of machinery. So what is the my cost of machinery? Cost of machinery is $10,000. Clear with this, right? Yes. My second is transportation charges from the factory of export to the shipment. That is transportation charges, $500. So these are all are in dollars. Next, handling charges. Handling charges is $50. Then buying commission paid by importer. From where it is the cost to the company? It's an expenditure borne by the importer. So buying commission will not be included while calculating the cost. Okay. So next, freight charges from exporting country. Okay. So my cost includes cost of machinery, transportation charges, and handling charges. Clear up to here? I told CIF. After my cost, insurance coverage should be there, right? Before it gets imported to India from the port of exported to the port of import, right? So since it is not ascertainable, so at what price I will be charging at on my cost into 1.125%. So that comes to $118.6875. Then freight, sorry, freight charges is from exporting country to India is 1,000. So my CIF value is first cost, my insurance, and my freight charges 11,668.69. Now is exchange rate to be considered is 70 rupees. 70 rupees. Answer is 8,16,808. Clear with this? Any doubts here? I'm saying CIF, cost insurance. First cost, then the goods should be covered with the insurance before the import of goods, like transportation of goods take place from exporting country to importing country. So insurance is charged on my cost. I'm not including my freight. Clear? And one more. So answer is given in the PDF. Okay. The last question. Calculate the duty. Where the first three question combination, not first, second and third question combination. Sir, as I told, cost, insurance, and freight. Freight charges will be levied after my transportation starts, right? 1,000 won't be considered while calculating my insurance. Answer Last question. Yes, answer is right, sir. Palani, sir. Answer. Right. So my first is compute the total duty and integrated tax payable under the custom law on the imported equipment based on the following information. The assessable value of imported equipment. So my assessable value include my freight and insurance, right? So 10,100, right? Next, date of bill of entry is 25th April. The custom duty on this date is 10% and exchange rate notified by the Central Board of Excise was $1 per, sorry, 65 rupees per dollar. So initial, as per discussion, what we had told, so bill of entry is a date of exchange, right? Even though there is an increase in rate or decrease in rate also, we need to take once the bill of entry has been done, issued. Okay. So my exchange rate is date of entry inward and basic custom. The second one, 21st. 21st, that is before the issue of bill of entry, there was a bill of inward entry inwards. Okay, that time the basic custom duty was 20% and the exchange rate notified by central government was 70. So in this point number 1 and 2, which point will be considered, either 65 rupees or 70 rupees for my conversion? For my conversion, which price will be considered? Yes, 65. Bill of entry, date of inward means the goods has arrived the custom port, that's it. Where a bill of entry, it has been issued for clearance for home consumption. So in such case, so point number 2. So sub point 2, where the duty is 10% and exchange rate is 65 rupees. So exchange rate is 65 rupees. Assessable value is 6,56,500. So my basic custom duty is at 10%, not at 20%. Clear? Bill of entry when it has been generated and issued. Then so integrated tax is payable at 12%. Then social welfare charges at 10%. So social welfare charges, add social welfare charges. So that is at 10% of 65,650, right? Into 65,650. Sorry, 10%. Okay. So to calculate IGST, so my integrated tax, my total value will be my assessable value, my basic custom duty, social welfare duty. So my IGST, IGST is at 12%. At 12%, where is charged. So my custom duty is one, my basic custom duty. Second is my social welfare charges duty. Sorry, social welfare duties. Then third is my IGST. Right? Clear with this? Bill of entry. Yes, answer is 1,59,660. Yes. So that will come to an end for your valuation, calculation of duties. We will be learning about import procedure and export procedures and other. Hmm.
Okay. So this is the session for today's morning. So madam has also shared a customs PDF document, and you can also, I have also shared one link in the chat box. You can directly download those documents. Session. Okay, session documents have been placed there. Consolidated only kept there. You can download summary document from madam here. Okay. What is your opinion about the class today? What is your opinion? Why we have to know about customs? What is customs? Why we have to know about customs? Why there is a need of, what is the need of understanding the customs act, custom calculation, calculating the IGST through that customs and all other things? What is the need? Indirect tax law, yes. We cannot concentrate only on GST, how GST is linked to the computation of all these things. Just not only to gain the knowledge, also to facilitate your taxpayers, clients, because for your kind information, now the foreign trade policy is made so easy. Any small item available at any corner of the world may reach by the morning, and any such commodity from our villages or any remote areas may be sent and that be made available at any nook and corner of the world. So for that, there are some customs and traditions. So basically, if we understand, if any opportunity, because the opportunities will be very high now. So we should not lose any opportunity of, okay. That's what actually we have to understand, how the goods will come from other territory and how the goods will go to other territory. Just not buying and selling in our locality or any other. Okay. So any questions here to madam and the class? Very useful. Okay, realize that time. Okay. Required while claiming refund. Yes, that is the major area where you have to be strengthened on your own, and you should be a knowledge banker. you should be a knowledge banker, and you are a skilled person and a chartered tax practitioner. You should be readily available for hire. Okay. What about import of software through online? Importing of software through online is also taxable. OADR, if you go by section 15 and 16, you will come to know OIADR. Okay. 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 Now I will share you. So some people are the Medhavi username. How to create password. See, this is Medhavi. Where it is Medhavi. One can see all these details. First, what you have to do is, okay, you have to go to this website. Okay, this is LMS. Many people are typing it as IMS. It's not IMS, it is LMS. Okay. See. Here. Here you have to type either LMS at 123, small letters. Okay, last year students has to enter demo. Okay, the materials are made available there. Now even the downloadable question is also available there. See, if you go on studying, the progressive nature will also be automatically recorded there. Okay. Good morning, sir. This is Srinivasan. I have one doubt. For example, if I am exporting the goods via ship, the goods is covered by insurance. Our border limit is C, is 10 nautical miles. If suppose our goods got damaged, unfortunately, and it crosses more than 10 nautical miles international border, will the insurance be covered for the goods or not? Madam? Madam?
Yes, sir.
Srinivasan ji has asked one question here.
Yes.
When they are exporting the goods via ship, if the goods were damaged in the international border, whether the insurance will be covered, his question is.
But
Insurance means that will come under the insurance policy and other things, no?
yes, sir.
Damage and other things. We will take an FAQ about this one, sir, and will answer you. because we are not much know about the policy of insurance, damages and claims. We are covering on the part of the foreign trade policy, computation of tax, and other allied. We will come back to you with answer. Definitely, we have taken it as an FAQ, sir. Okay. International coverage starts from the port of origin. Not able to, okay. Not able to log into Medhavi means, okay, once let this class be over, I will have, by that time I will see any technical glitches are there, that we will clear everything. Password wrong. Password wrong means you have to enter LMS at 123. L, small L. You should not type it either L in cap or I. Okay. Medhavi. Okay. 2nd March yet not activated, sir. Please wait. Krishna Kumar has sent this one. No, LMS. This is not IMS. This is LMS. LMS at 123. Yes. There will be a big confusion between O and 0 in the similar manner. Lower caps of L and I. Yes. It has been already sent in the box, sir, chat box, Shashikant sir. You can download. Once this class is also over, you will be provided with the recorded version. Okay. You can once again, you can sit in the leisure and comfortably you can watch the entire class also. That will also be made available. Let us not disturb in the middle. That's what actually we have saved all the things that will be made available once it is 4th March. 4th March is yet to open, sir. Up to 29th of February, it has been keyed in. Yes. Sir, yesterday's madam has already given, and even yesterday's class has been even kept at the link, drive link. Once again, I will share you the link. You can download now. Just you can click on this link and you can download those 3 documents. One is business regulatory laws. Another one is accounting, applied accounting. Third one is GST. Okay. Once today's class is over, that will also be placed with there. Okay. Okay, thank you one and all. So we'll meet you in the evening, sharp 6 o'clock. Okay. Thank you, Madam Ji. Thank you.
Thank you, sir.
Thank you, madam. We'll meet in the evening, madam. Thank you.
Yes, sir.
Thank you. Happy day.
Yes. So procedure to start like the steps for the importing the goods or the steps for exporting the goods and relative assessments, then followed by FTP. Okay. So how the foreign trade, how the import of goods take place? What is the basic document? Initial, I should have the registration, IC code. Then please, yes, IC code, shipping bill, GST registration, bill of entry. Okay, yes, bill of lading, import export GST, IC code. Okay. So after from June from Jan 23. So IEC, whatever the IEC code received after July 2023, IEC code will be your PAN number only. Have you come across with that PAN number, IEC code? Yes, and it made easier to obtain the IEC code than before. And so the first is, so the process is first initially the items, okay, from the exporter point or from the exporting origin. So it has been loaded either by way of vessel, ships, or aircraft or landways. If only now we'll discuss only with ship and aircraft. Okay, so it will be loaded. The loading will be done unless by prior approval of proper officer. Okay, then when it reaches the port, okay, unloading will not be done without any unloading will not be done without any prior order or approval from the custom officer. So, unless from here, from air, from the transit still the port, okay, the person in charge, so the person in charge will be the liable, will be the person responsible for the goods, goods in the shipment. This responsibility does not relate when the vessels or aircraft which is compelled by accident, stress of what weather or other unavoidable cause. So something has happened. Okay. So when volcano arise during there was a damage to the goods, or the goods has been lost, ship has been like it's not in the what it's not seen. Okay. In that case, the person in charge is not liable. Okay. However, the first obligation to the person in charge is as soon as as soon as the ship reaches the port, he should inform to the proper officer, and he is not liable to the what unloading of the goods. Okay, so if there is any when there is a wrong weather condition, such case if he is landing in other ports, okay, or other than custom ports, in such case he should immediately inform to the custom officers. Okay, so that port, it should be a reasonable, it should be a valid reason, and it should not be for the purpose of what fraud. Clear still here? Then person, he will be carrying the manifest, import manifest, okay, or import report, okay, where it ensures what are the items, okay, which has been shipped from country A to India. Okay, there you'll have the details of the goods, and in the vessel, okay, what all they have brought. Okay, so each shipment, okay, yeah, about the details of the shipment. This should be, this import manifest should be submitted, okay, should be submitted to the proper officer prior to the arrival of the vessel or the aircraft, okay, in the electronic filing. So when it leaves the port of the exporter, so before reaching the port, the import manifest should be what filed electronically to the proper officer. Okay, if belated filing is there, so if you have not filed early or there is a delay in filing, okay, in such case there should be a valid reason. Okay, then when the import manifest has been submitted, so in that you have missed the certain points and certain specification of the goods. In such cases, the proper officer may permit for the amendment of import manifest, unless there is no any fraudulent intention. Okay, and the person in charge should be declared as truth of its content, and the next, the unloading will happen only when you're the proper officer at customs, okay, proves and issue an order of clearance. Okay, so in such case, the unloading will happen. Next, after the issue of clearance, there will be two options. Either the goods will be warehoused or cleared for home consumption. Clear? So the next, if it's warehoused, my custodian will be there. The next, so from the person in charge, the responsibility, okay, the goods should be kept in proper manner, and the responsibility will be transferred to my custodian who is in warehouse. Okay, and there, if any pilferage happens, okay, custodian is liable for any pilferage. And because while during in his custody, there is a loss of goods. Okay, in such pilferage, he is liable to pay the duty and even to compensate the revenue. Okay, the rate prevailing on the date of delivery of import manifest are as may or as the case may be. Okay, when the goods reached when the goods reach the port in that date, whatever the rate were prevailing, such rate will be applied for the pilferage. Okay, whereas it is clear for the home consumption, in that case, bill of entry. Clear with the steps? Yes, yes. So let's start. So my basic document is IEC code. It was introduced in FTP. So for my 2023. Okay, where IEC code is obtained before the start of import and export of the goods. Okay, search for the goods to be search for the goods. So what type of goods you want to import, who is the vendor, and what is the quotation? These are my basic criterias, and whether before importing, do I have any exemption to that particular item, or is there any restriction, prohibition on that importing of goods? Okay, these should be taken into consideration. Okay, and any from which country we are importing the goods. Okay, these are my basic documental basic terms. Okay, factors to be considered. First, arrival of vessel and aircraft. And in this, who is responsible? Person in charge of vessels or an aircraft entering India from any place outside India shall not cause or permit the vessel or aircraft to call or land. Okay. So in case of land, if I say in case of land, who will be my person in charge? In case of land, goods exported. Yes, driver. You see, even though in case of land also they'll have a double surety. You need to FIC copy need to be submitted, and if you are declaring as what export to AOU or export oriented units or SEZ, in such case also for the amount to be realized from particular vendor, the FIC copy needs to be submitted. Okay, there is an old, even though in land, okay, land, driver, person in charge, then customs, whether a warehouse or a home consumption. Clear? Huh? So then, so where for the first, yeah, exception for above is not applicable. So where the person in charge is not applicable is when when it is coupled with accident, stress of weather or other unavoidable cases to call or land at the place other than the customs port or customs airport. However, the person in charge of the vessels are following the obligation. See, instead of landing in custom port, he had landed in some other port. Okay, so for if whether he needs to prove and he needs to have a valid reason why he has landed there. Okay, so if he has landed there, there should be an that he should communicate to the proper officer, and the goods should not be unloaded. And diverting the route from custom port to other port, it should not be intention of fraudulent activity. Okay, then you will have to report the arrival of the vessel to the nearest customs office or office in charge of police station and produce the log book demanded. Okay, the whatever the documents which he have, the shipment which have taken place, those goods details, everything should be produced to the proper officer and officer in charge. Okay, he should not allow any unloading of goods without permission and should not allow any passengers or crew or to leave the vicinity of the vessel. However, the goods can be removed or passengers and crews can be allowed to depart if the same is necessary for the reason of health, safety or preservation of life or property. Okay, if there is a serious issue like you can't stay in that ship. Okay, so it may, like example, the what it may be sinking. So in such case you need to depart from the ship. He should comply with all the directions given by such officers. Any failure on the part of the person in charge of vessel to comply with the above provisions will not only render him to be liable to the penalty under section 112 of the Customs Act, but also render the import of goods liable to the confiscation under section 111 of the Customs Act and conveys liable to confiscation. Clear? So if he is diverting from other port, so after the goods has been reached to the port, okay, he has the import manifest. Okay, and the goods, the import manifest should be approved by the proper officer that should be delivered with the details. And if the proper officer wants to check, have a check on the goods, he can investigate regarding the goods. Okay. Okay. After ensuring that the vessels are landed only in approved custom office or a custom port or airports, further duty is cast upon the person in charge of vessel to deliver the import manifest. So before reaching the port, already on online e-filing, the import manifest has been filed. So this should give the all the details of the goods which has been carried from the vessel in the vessel. Okay, the time limit. The time limit to submit import manifest is prior to the arrival. Prior to the arrival of the vessel or aircraft in electronic filing. In case of vehicle, 12 hours, within 12 hours after its arrival in the customs station. Okay, so uh, the import manifest should be submitted within 12 hours after arrival. Okay, but here whereas in ship and aircraft prior to the arrival. Okay. Belated filing. The belated filing can be accepted by proper officer only on the valid justification grounds. Okay, so then next, if my import manifest does not contain full sufficient information, okay, I'm not suppressing any facts about the goods, but there was a missing information. Is my audio is there? Okay. Yes. Okay. So if there is a missing facts information, so the person in charge is not intentionally miss the information. Okay, in that case proper officer can verify the documents and correctness. Okay, he can give an opportunity to amend the amend the import manifest. So there is an exception that no fraudulent intention. There should not be any fraudulent intention or suppression of information. Okay. So amendment. So belated filing only on a valid reason. Whereas in amendment, there is a missing of information. The person delivering the import manifest or report should subscribe in the declaration as to the truth of its content. So once the goods has been reached to the port, then the delivery of import manifest as done to the proper officer. So if he accepts imported goods are not, so he should accept imported goods are not unloaded from the vessel until the entry inward is granted. Entry means an order. So that there would be a test check. Okay, if you are, if the importer is importing on the first time, okay, in that case he may check, or if the combination of the or the materials is like likely to be doubtful, or like you are importing some other material, so suppressing the fact. In such cases, the goods may be what investigated, checked. Okay, so the goods will not be unloaded until the proper, like a proper inward grant to be granted from proper officer. So imported goods not to be unloaded. Okay, not to be unloaded unless mentioned in the import manifest or import report. Loading and unloading at the approved places only. Clear still, yeah? So after unloading, so example for change in port, example, it might be there was a sudden what earthquake, in Cochin. So nearest port you can unload, right? But you need to communicate to the customs. Example, volcano or natural disaster. So I'm not diverting the shipment necessarily or on fraudulent activities, okay, or suppressing the goods. My intention is not that, okay. Or so when I was traveling, the shipment, I saw a leakage of what petrol or a diesel, okay, whatever used in the ship, okay. There is a leakage. At any time, the ship can sink in the sea. In such case, the nearest port I can go, right, instead of traveling long way and sinking. Yes. In a summary, here's a short note. Clear? So if last minute, if you understand this picture, that's enough. Here I will get import manifest, and this is issued by person in charge. Before he arrive to the port, this should be filed via electronic filing, and import manifest will be reviewed by the proper officer, and he will grant the approval for unloading. Okay, after unloading, It can be in either warehoused or released for the home consumption where bill of entry is filed. Clear of import procedure. Okay. The next. So after clearance, now I'm going for a custody. This section where until the imported goods are cleared for the home consumption. Okay. Until there, which is it is cleared. Okay. Or the warehoused or are exported for the transshipment. So I had a stoppage again. It will be transported to another place. Okay. They shall remain in the custody of the such person as may be approved by the Commissioner of Customs. Your Commissioner of Customs. He is called the custodian. Okay. His responsibility is to maintain a proper records of goods received from the carriers and send the copy of the record to the customs authority and not to permit such goods to be removed from the customs area or allow them to be dealt with the otherwise except under the specific permission of the custom authorities. So next, the liability. The liability of the custodian is if if any imported goods are pilfered after unloading in any customs area while in the custody of the custodian, such custodian shall be liable to pay duty on such goods. Okay, the loss of revenue is compensated by custodian then the rate prevailing on the date of delivery of import manifest. So delivery of import manifest or as the case may be. Based on the case to case, they'll decide the rate prevailing on the day of delivery. Clear? So liabilities. So if there is any pilferage of goods, then the liability to pay custom duty is on custodian. Then loss of revenue will be compensated by custodian. Then rate, the liability due will be charged on the date of delivery of import manifest. Okay. If next, after custodian, either I can clear for home consumption, right? In such case, I need to make an application to the proper officer for clearance of the good. Okay. The bill of entries prescribed for this is there will be mainly three copies. One white is for home consumption, yellow for warehousing, or green and X bond clearance for home consumption. So without keeping the bond, okay, there will be clearance for the home consumption. So bill of entry can be filed electronically to customs houses providing his facility. So it will be in 4 copies. So bill of entry, the first copy will be given to the custom authority. The duplicate copy will be given to the custodian of the cargo. The triplicate, the third copy is for importer. The fourth copy is for the bankers. So when during the payment or during the receipt, during or okay, realization of the invoice, in such cases, for each amount received, okay. So within 2 to 3 working days, FRC copy attached with bill of entry should be submitted to the bank. Okay. What is bill of lading? Bill of lading is given by the carrier of the goods. Is the imported documents of the title to the goods. The bill of lading covers all the goods imported with the description. Okay. As per section 46, the subsection 3, a bill of entry is to be normally filed after the delivery of import manifest, okay, to the proper officer. However, it may be kept in the mind that as per section 48, the cargo has to be cleared from the wharf within 30 days of unloading. Okay. Clear still here? Any doubts? Import. Fourth copy is for my the bank. So in case of import, you are making the payment in foreign currency, right? At the US dollar. Such time when you are making payment, your bank will ask the documents before making the payment. It's not like domestic payments. Okay, every import and export documents to be attached. Your original invoice, shipping bill, FRC copies, then your bill of entry. Yes, we need to file a copy with the bank. Clear, Celia? Yes. My export is more easy. So my export is freight stations or static for exporting any item or importing. I need to have a prelim documents, that is my IEC code, a valid GST number, and to whom am I exporting, that my invoice and shipping packing bill, okay, or whether I'm a merchandise exporter or normal manufacturer. He is indulged in trade, so he is not the manufacturer. Some other person who do not to export, okay, on his behalf will be shipped to the customs port, okay, passed on the master of the vessel. Okay, it is the goods are not loaded unless duly passed by the proper officer. First question, first step, either in import or export. Okay, without the order or the grant from the proper officer, he cannot load or unload the any goods. Okay, person in charge of conveyance shall not permit the loading of the loading at the custom station. So whatever the goods come, he cannot load it. Okay. Only on the prior approval of the custom officer, he can load the goods or of the export goods other than the baggage. Other than the baggage and mail bags. Okay. The baggage is something a small, like I'm sending some gifts or but other than accompanied baggage. So I was shifting from foreign to India permanently. In that, my small items, whatever I've used, so those baggages does not include. Okay, the export goods other than the baggage and mail bags, unless a shipping bill or a bill of export or a bill of transshipment, as the case may be, duly filed by the proper officer, has been handed over to him by the exporter. Okay, the exporter should provide the all your invoice bill, shipping bill, package bill, and other documents. What are the description of the goods which has been exported. Okay, unless these documents has not been handed over to the proper officer, the loading cannot take place. So entry outward. Entry outward stipulates that export goods are not loaded on the vessel until entry outward is granted. Okay, as I told, then for loading of goods for export, the following requirements are to be fulfilled. One, I need to get the grant from the export. Okay, the shipping bill. Okay, the next entry outward to be granted, then shipping bill under section 50. Documents required. Documents required is one, my shipping bill, bill of export, then bill of transshipment. Either one of them, sorry, all are duly passed by the proper officer. Okay, after this verification, he may grant the order to the loading of the goods. Then next, export general manifest. similar to import general manifest. It's an export general manifest where the person in charge, okay, he will have the details, okay, of the conveyance which the goods he is carrying. Okay, in that manifest, all the details should be given, listed as to give the person in charge of the conveyance. Okay, he has to give the customs authority a complete list of the cargo exported from India and taken by the conveyance under this charge. No conveyance to live without a written order. Okay, unless there is an speaking letter or a written order given. Okay, the person in charge of the conveyance which has brought any imported goods or has loaded any export goods at the custom station shall not cause or permit the conveyance to depart from that custom situation until a written order to the effect has been given by the proper officer. Clear still here? So import and export is clear. Your postal mail tax. So until a certain limit or any gifts or rakhi, okay, which you are sending to the people outside India. In such case, okay, those bags are exempt from providing the following documents like your invoice, or if you're sending example, or if you're sending the like the products which are homemade or any items of personal use in the postal, okay, via post, exporting to the other country for the person. In that case it is exempt to provide all these documents. So SEZ, after FTP we can take on SEZ. Okay, this is the flow. Next, assessment of tax. So, same as in GST, I can do the assessment of tax where, so initial self-assessment. Okay, I will file and I will pay. Okay, I'll clear for what home consumption by paying the amount. Okay, okay. This self-assessment, the proper officer, my assessing custom officer may take up the case. Okay, so if he feels that everything is correct, okay, then end of it. If he sees that I have where the custom duty is paid lower than what actual duty to be paid, okay, if he does not agree, he may call for additional documents. Okay, then the reassessment will be done. Reassessment will be done by proper officer. In that case, if the assessee agrees, if the assessee agrees, he will pay the difference. He will pay the pay difference of tax liability. Tax liability. Okay. Now, if he disagrees, appeal. If he disagree, he can appeal. Clear? So before he issue an order, okay, after if we disagree, there should be a speaking order, not an oral order, speaking order giving the valid reason and document. What are the rate considered, what price, why. So the order should contain all these items. It is not the one line statement of not approval. Okay, disagreeing with the amount. Clear with this? So, so duty to be self-assessed by importer or exporter. Okay. And importer in his bill of entry or exporter entering any export in his shipping bill or bill of export self-assess the duty, if any leviable. Okay. If I have an exemption on my export, even though I need to have a calculation. Free export means the any what advance ruling or any order, those things should be attached, leviable on such goods. Verification by proper officer. Okay, so even the what scrutiny also gets covered in my assessment. Okay, the purpose of verification, the proper officer may require the importer or exporter or any other person to produce any documents. He may ask any documents to be produced whereby the duty leviable on the imported goods or goods, as the case may be, can be ascertained, and thereupon the importer or exporter or such other person shall produce such documents to furnish such information. Okay. Then reassessment of the duty by proper officer. If assessment done, if not done correctly. Okay. So when assessing officer feels that there was some mistake or any if any fraudulent activity is taken, he doubting regarding the calculation of the custom duty. In that case, he can ask the further documents to be produced. So even after the satisfaction on that document, he may call the end for the reassessment. Else, he may pass an order, okay, regarding the calculations and rectifications to be done and the difference to be paid. If he accepts, then it will be last. If he disagrees, again it will go for appeal. Okay. The speaking order for reassessment to be passed unless the importer agrees with the reassessment. If importer does not accept the reassessment, it should be given in the speaking order should be given in within 15 days. 15 we should be given within 15 days. My self-assessment. My self-assessment will contain even a reassessment and the scrutiny also. Self-assessment, I will calculate my assessing value, basic custom duty, and I will pay the tax. If if it is there is a mistake, there is an error, or there is a short payment of tax, the assessing officer will check, review, and make a necessary. Okay, will may call for further documents to be produced. If we check the correctness, no order will be passed. If he sees some errors, okay, or shortfall in the payment of duty, he may call for he may ask for to pay differential tax. So whatever we learned in GST, so for the provisional assessment, so for provisional assessment, so for what purpose I can what go for provisional assessment before importing or exporting the goods? Okay, so I can go for value and rate, right? Yes, value and rate. Similarly, in my provisional assessment, my first condition is so unable to. I am unable to ascertain the value. Unable to ascertain the value of the goods. Then second, proper officer deems it necessary to carry out the chemical examination or test. Means, so some chemicals you have imported, he will think that the chemical is a combination of two or three other chemicals, where the other chemical has been suppressed. On that check, on that cases, he can carry out the test. Then, if necessary documents in your scrutiny reassessment, the necessary documents, not necessary documents are not produced, then Next, further, if he may feel so, there is any fraudulent activity. Okay, he may call for provisional assessment. Okay, before the export takes place. Okay, where the importer or exporter unable to make self-assessment and makes a request in writing to the proper officer for the assessment, where the proper officer deems it is necessary to subject any import goods or export goods to any chemical or other test, where the importer or exporter has produced all the necessary documents and furnished full information, but the proper officer deems it necessary to make further inquiry. Okay, even though the documents has been produced, you want to make a further inquiry when necessary documents have not been produced. Okay, or information has not been furnished and the proper officers deems it necessary to make further inquiry. So PO may direct the for the provisional assessment on security given by the importer or exporter. Okay. So where, where the pursuant to the provisional assessment, if any documents of information is required by the proper officer for final assessment, the importer or exporter, as the case may be, shall submit such documents within such time. The proper officer shall finalize the provisional assessment within such time in such manner. Okay. So So order of the provisional. So order of the provisional assessment. Provisional assessment. So I need to intimate within 15 days. Okay, after furnishing of documents. After furnishing of documents from the assessee. From the assessee need to communicate within 15 days. 15 days. If the documents are not produced within 15 days, so we need to assume and issue the final order. Okay. Then next, if 15 days and there can be an extendable time, 3 months from approval of ACDC, then if you go for commissioner, unlimited time. In customs, this one option, commissioner has an rights or option to give an unlimited time. Whereas if you have come in GST or any other case, there was a limited period, either 6 months, 1 year, 5 years. But custom commissioner will has an unlimited time to grant. Okay. So the finalization of provisional assessment as if the documents, okay, documents has been submitted. So within 2 months from the receipt of the documents need to be within 2 months need to be pass that final assessment order. Assessment order. In that case, in that case, after final assessment order, my final duty to paid is more than calculated duty, paid duty, paid duty. So in that case, difference shortfall will be paid along with interest at 15%. So that duty will be the differential amount on the first day of the month in which the duty is provisionally assessed. Okay. When provisionally paid means when your bill of entry has been made. As if the first initially only you have not paid the duty, custom duty, treating as that, and on differential amount charging the interest at the rate of 15% per annum. If excess duty paid, then you will get a refund. So refund, that is interest at the rate of 6%. That too after, if after making an application, that is after 6 months, so after 3 months. Whereas in GST, it is 60 days, right? 3 months of issue of order. Clear with this? Clear? So assessment. So what is duty drawback? So duty drawback. Answer. Duty drawback. The word with the duty drawback you will get to know, right? Answer. So guess incentive or any special incentive on capital goods, promote the export. Yes. The refund of payment of initially collected. So you are re-exporting. Okay, nice. So when we discuss about duty drawback, will be on two bases. Section 74 and 75. 74 deals with re-exported as it is. So I'm not making any changes for the goods which has been imported. So I imported a capital goods. Okay, say a machinery. It was lying for 2 months. I have not even used that. In such case, I'll have a duty drawback, whatever I have paid. Okay, paid in the sense I have not taken or claimed any exemptions to that. In that case, whatever I've paid, I'll have a refund or claim of 98%. If there was usage of goods to the way what for 3 months, 6 months, in such case, the duty drawback, the duty refund will be of 70%, 65%, and so on. Whereas in section 75, 75 materials like raw materials are used in manufacture or processing and such goods and then exported. Here the criteria is that the raw materials should be identifiable and the materials which are being imported, okay, should be identifiable, and it should be it is not a negligible item, and the gas and petroleum products, whatever the input, those products are not taken into consideration, are not taken into consideration. In such case, you will have some benefits or incentives. Okay. So the drawback, first we will discuss section 74, when the goods are capable of being easily identifiable. Which is identifiable. Whatever the capital goods which was imported, in the same sense, I'm exporting, okay, identified, which have been imported into the India and upon which any duty has been paid. Listed has been paid on importation, okay, and are entered for export, and the proper officer makes an order permitting clearance and loading of goods for exportation under section. Next, are to be exported as baggage, and the owner of the baggage for the purpose of clearance it makes the declaration of its content, okay, to a proper officer under section 77. Such officer makes an order permitting the clearance of goods for exportation. So in order to increase my exports, okay, for marketing, I can send my goods, okay, not worth rupees 3 lakhs, okay, less than 3 lakhs, in a postal, like as a baggage. But on the box, on the top of the box, I should write as duty drawback. Duty drawback. Okay. This should be communicated in written to my postmaster. Postmaster. He interns while submitting the books along with the documents. or provides the information, okay, to the my custom officer. If he if if he is not satisfied, my custom officer is not satisfied, he may ask the additional documents within 15 days to be submitted. So the exporter will have 30 days to submit the documents. Clear? So my one condition is goods should be identifiable where the AC or DC will provide the order. Okay, and he may provide that this is an eligible for my duty drawback, and goods are entered for the export, that is within 2 years. Okay, the goods which have been imported is been exported in its same original form within the 2 years from the date of payment of import duty. Okay, not the date of importation. When from the payment of import duty means when it is cleared for my home consumption. Clear? From that day, 2 years is calculated. So 98% of such duty shall be except otherwise provided year after be paid back. Okay. So the duty drawback will be permissible if the goods are identified to satisfaction of AC or DC of the customs which were imported. Then the goods which are being exported are within 2 years. I'm not exporting after 4 years or 5 years. Okay. Then from the date of payment of duty on the imported the goods. Payment of payment of duty, bill of entry. At that time, I'll be paying my duty. However, in any particular case, the aforesaid period 2 years on sufficient cost being shown be entered by the board by such further period. Okay. Then duty drawback is not allowed. Okay. The whatever the duty drawback of 98% is not allowed. Yeah, so section 75 will explain. Okay. Yes. No, you need to file not at the time. With the documents, you need to file for duty drawback. Okay. Now 74. After that, 75 will be explaining. Okay. Duty drawback of payments. Payment of duty will not be allowed. Okay. Where you have imported your bearing appearance, chest, exposed cinematographs, films passed by board of film censor of in India, or unexposed photographic films, papers, and plates and X-ray films. If whatever the items mentioned here are not used, okay, as it is, whatever the product which have been received as it has been exported, in such case the duty drawback of 98% is liable, eligible. So if the goods which has been imported, if simply the asset is lying there, then 98% I can claim within 2 years. Whereas there has been a usage of the product. So I've used for 3 months, 6 months. If I've used for 3 months, so 95% from 98, it has been reduced to 95. If the goods has been used for 3 months, 95%. Or it has ranged from 3 to 6, 85. The difference is 5% here, from 85 to 75, 10. Then 70 to 5. 5, 10, 5, 10. Then next 5. Next 5. Clear? If the capital goods which has used for more than 18 months, 18 months, that is 1.5 year, then there is no duty drawback. There has been special rate for the motor vehicles while calculating if nothing has been used, the card has not been used, it is immediately re-exported. Such case, 98% of duty drawback will be refundable, whereas percentage of reduction of duty drawback is related when motor vehicle, other, okay, inside for motor vehicles, per quarter, the depreciation, you need to reduce depreciation, the next you can claim the duty drawback. Clear? Clear with section 74? So my condition is, one, I've imported the goods. There is an traces, not traces. I have not changed its original form. Identified my AC and DC within 2 years. I'm exporting either repair or any other matters. Or I don't want sale or return basis if I've purchased the goods. See, the next is where duty drawback on imported materials used in manufacture. Yes, identifiable. So in section 74, it should be identifiable. Okay. Where when the goods are imposed, when the goods are imposed, imported goods are used in the manufacturing, and the manufactured products is exported as in the normal export. In such case, duty drawback is available, okay, as per the fixed rate by the government. Okay, no limit to export, but the value addition criteria is stipulated. Forex must be realized within the permitted framework. So, in order to show my turnover, I can't just export and import and show my increased turnovers. Okay. Then next, the no duty drawback of export value of goods. Okay. When the export value of goods is 100 rupees, whereas when you imported the say, raw material, it was 115. In such case, duty drawback is not available, or the export value does not exceed the certain percentage. The percentage will be notified by the government. In such case, duty drawback is not applicable. Okay. Now, clear where either the value addition to be checked, then my export, the export value should be greater than my import value. Import might be my raw material. Such case, duty drawback is available, or the inclusion of item, percentage of item as per the notification of the government. Okay, if it's less than that percentage, then the duty drawback is not available. The drawback under section 75, the drawback under section 75 is on total different footing. So the following important aspects should be remembered is, first, the goods exported are totally different from the input. Okay, the inputs could be either imported goods on which the customer has been paid, or indigenous goods on which excise duty has been paid. Okay. The next, the existence of the imported or indigenous excise duty paid in the final product are not capable or of easy verification at the point of export. At the time of shipping bill, okay, entry for export entry, where the assessing officer views that there is no capable or verification, I can't verify, okay, for the what the raw materials used or which is re-exported. The goods, the goods, the inputs might have undergone the changes in physical shape, property, etc. The quantity of input per piece of final products may not be uniform and may not be capable of verification at the time of exportation. So in these cases, it is not eligible for duty drawback. No duty drawback if my value is less than the value of import, the export value does not exceed the value or percentage, okay, notified by the central government. No duty drawback is available if goods manufactured out of pre-import. If I have received any samples, such cases, the duty drawback cannot be calculated, or if any exemption is given for the imported goods where the duty is not paid. In such case also, duty drawback is not available. So there are rules, okay, while fixing. So rule 3, general rule, okay, where all industry rate, okay, on an average rate will be fixed by the government, okay, prescribed, that is certain percentage of your FOB value. Try to free on board for the calculation of duty drawback. Say 3% of FOB value will be declared as duty drawback. That's a general rule on a particular item. Where my rule 4 says for my valuation for duty drawback is my branded rate. Okay. If my all industry rate, if my all industry rate is not identifiable, okay, is not fixed, so I need to apply for to the principal commissioner. I need to apply for principal commissioner within 3 months. Within 3 months, and the principal commissioner should provide the order, okay, for fixation of my percentage. Okay. Then next, rule 7. Rule 7 is my special brand. Special brand where my all industry rate is less than 80%. Where my all industry rate is less than 80%. 80% of actual duties exported, apply to the so I'll apply to the principal of commissioner. Then within 3 months, we will pass the order and fixing the special rate to the particular individual. Unless you apply, you won't get this rate. Okay. So rule 3 may be paid at such rate determined by the government and reduced by any amount of exemption. So reduced by any amount of exemption. So you had example. So you had custom duty you need to pay, but IGST is not applicable for you. In such case, you have an exemption which you have availed. In such case, that will be reduced while calculating the duty drawback. That IGST free, but exemption of IGST will not be taken into consideration. So no duty drawback. Duty drawback will not be allowed when it is a packaging material, jute material, or which has been exported on free basis. Okay, I mean imported on free basis. Then where no drawback is determined, the manufacturer has to apply for the drawback within 60 days or extended period up to 90 days. Further is 90 days. Okay. Days seeking the brand rate from the government, giving all the data and information about the use of inputs and manufacture, etc. When the drawback rate is low, a special brand rate will be applicable. Where the rate is lower than the 4 by 5th of duty paid, that is 80% of duty paid. Revised rate may be applied within 60 days. Further of 30 days, proper rate will be fixed by the government. Brand rate letter will be issued accordingly, and provisional payment will be allowed subject to the adjustment. Okay, when the value and the rate is not known, Under this section, under Rule 7, he may apply on provisional assessments. Okay. And no duty drawback is available if you're claiming less than 1% of your FOB value or 500, whichever is less. Clear? Clear up to your. So in that, see, if import of manufacturing, capital goods, you have under the foreign trade policy, right? Export promotion capital goods, exemption on promoting capital goods. So can we have 10 minutes break? We'll resume by 7:25. Yes, EPCG.
Okay, okay, madam.
Yes, sir.
Yes, madam.
Yes. So after my import and export of goods, then my services. Okay. Service is invisible. So how can we know that the service has been exported? What is the proof for me? Proof. Proof of service has been exported. Export of service. Yes. Inward remittance. So when your inward remittance is in dollar, when you're invoicing, okay, your invoice will be in dollar. Okay. And when the remittance or any inward remittance, you need to submit the documents. What is the purpose? You can't say all the inward remittances for my personal income, or one of the relatives is sending the money. Okay. In that case, if any personal inflow, 15 CB, they may ask 15 CFA right? In invoice, you'll submit where in that first you need to have IEC code and submit in DGFT site all the documents, claim for refund. Okay. Today we have freelancers who provide these services outside India, or any art services outside India, where the inflow is more than $15,000. We have 3% of rebate on the duty, whatever is paid. Complete and next. Yes, FRC copy, document of evidence. Yes. So for foreign inward remittance copy, bill of entry, then your shipping bill, invoice. These are the documents which will be submitted, okay, to the bank. While what realizing your bank account, when realizing the funds remitted. Okay. Clear with export remittance. So this is very beneficial when for services no shipping bill, but you have an inward remittance, right? And you're filing with DGFT. That document. So where you have provided the service of 1 crore. If you have an expense of 50 lakhs, balance 50 lakhs. And the 3% of rebate is straight away on my 1 crore. That is my 3 lakhs. Again, the 3 lakh is my profit, right? So, years and next. So, what are the main objective of foreign trade policy? Main objective. So, it is a 5 years policy. So, every 5 years, it gets changed. Have you seen regarding recent foreign trade policy amendment 2023? Have you seen with recent amendment? of FTP 2023. DGFT is Director General of Foreign Trade. It's a DGFT website where I'll be applying online filing. Okay, you're doing a freelance of designing of boats to the boats. Okay, customer. I have a GST. What services are eligible? Notified export services. Notified export services are eligible for the credit to be claimed. Okay. If you are not able to take the refund, you can transfer the credit. So, like, what is PCB board design? So I didn't get you. Okay. Panel control board, then it will be a goods, right, sir? Yeah, anything which is coming in the printed form. Only design.
Design.
Okay. So that IT part I need to check, sir. So on that I will check and get back to you tomorrow, sir. So initially any like notified services, so you'll raise an invoice. Okay, and the inward remittance does not get cleared to your bank account unless you provide the sufficient document regarding the inward remittance. In that case, so you need to have IEC code and apply for DGFT. DGFT, so what are the inflow or what purpose and invoice to be submitted here, then you can produce for your clearance of your inward remittance. Clear? Then next, your foreign trade policy has been amended in 2023 and it is a 5 years policy. So any changes or any relaxation or any waiver of duties, so any other expansion or any particular area which is backwarded to get forward, to bring it forward, in such cases, new schemes will be provided by the government. Okay, the incentive to remission, export promotion through collaboration, exporters, states, districts, and Indian machines, and ease of doing the business, a reduction in transaction cost, and in initiatives. And in this new FTP, e-commerce has been included emerging areas. E-commerce developing districts as exports. So in small districts, whatever they at what you say, what is the famous of that particular district, so that would be exported, that goods to export and do the expansion, uh, streamlining these special chemicals, organism materials, equipments and technologies policy. So developing export potential, export performance, encouraging the foreign trade and creating a favorable balance of payment. Yeah, the foreign. So in foreign trade policy, so only for particular for exports, we'll be discussing where Ministry of Commerce, so Government of India, okay, the Director General of Foreign Trade will provide the rules and orders. Okay, from that year, from 1992. So annually and 5 year as a 5 years policy, it was updated and now recent is FTP 2023, okay, where regulates international trades, develops international trade, promotes international trade. So next, any grant or exemptions, okay, and any other duty drawbacks or waiver of the duty. In such case, the on 5-year policies it will be force. So first, streamlining of SCOMET policy, where where any special chemicals, organisms, materials, equipments, and my technologies. India is placing a more emphasis on export control regime as its integration with export control regime countries strengthens. There is a wider outreach and understanding of SCOMET amongst the stakeholders, and the policy regime is being made more robust to implement international treaties and agreements entered into by India. The robust export control system in India would provide access of dual use of high-end goods and technologies to Indian exporters while facilitating exports of controlled items, technologies under SCOMET from India. So there are export promotion schemes. So as we discussed, one is duty drawback scheme. Either you have not used means 98% or on the reasonable the at a reducing percentage duty drawback can be claimed, or if the goods has been imported for manufacturing the goods as per the notified percentage, we will be claiming the duty drawback or duty exemption scheme. So on advance authority, against like with advance ruling, so we will approach the customs before entering into the scheme, before entering into the transaction. So these type of goods we are being exported, so what is the benefit to be claimed? So in that scheme you will get the details regarding these what benefits and duty free import authorization. So your main business is of just export. So whatever import of raw material, I don't have any what domestic business. So raw materials purchased, okay, manufactured and re-exported. So in that case, duty-free import authorization can be I can apply for duty-free import of that. Okay. The next duty drawbacks is scheme 74 and 75 waiver, then reward scheme. So if you cross the certain limit of turnover, say of 3 lakhs dollars, US dollars, in such case you will have a certain percentage of rebate. Okay, in your what is certain in your to be paid, and EPCG scheme, what the that is export promote capital goods scheme. When you are purchasing the capital item, relaxation on the export of capital goods, and our units which are specifically classified as economic zone or SEZ zone, such as, okay. Okay. Yeah. The next, so under reward scheme, we have at 2 phases. That is merchandise export from India scheme, then service export from India scheme. So it's a merchandise export, okay, where the notified goods is exporting. Okay, that means where the actual manufacturer is not exporting. He doesn't know the process of exporting. So the other person who is doing the trading, okay, the exporter is the hold. Okay, in that case, you will have merchandise exposure service export. That case, he'll be holding bill to ship to and from whom the manufacturing all the details. Okay, taking goods outside the place of India and exports of notified goods. or notified goods. Okay, then landing certificate of proof of export. Then script value. You will be rewarded with some reward remedies or those with that scripts, whatever the goods which you have what exported. On that, generally you may get the rebate of 7%. Whereas services, export of services, okay, in that case, holding IEC code is must. Then in current year, 15,000 more than, if you export more than 15,000, you will be eligible up to 3% for the, okay, for export of services and supply of services from India to any other country, or supply of service from India to service consumer of any other country in India. Okay, like any other country means, okay, any other country in India means SEZ, where first 15,000, or if you're an individual, $10,000 minimum if you're exporting. The next, exporting other than India means exporting actual meat outside India. Then the SEZ EOU zones, export notified services. So notified services to any country. In such case, you can claim the rebate, remedies. Okay. So normally notified rate is generally 5%. If you are on freelancer services, example, based on your services, the rate will be given. The claim of scripts credit, okay, will be permitted each year in the form ANF 3B. Whereas in goods, ANF 3A. So this you can apply in DGFT side. Clear with this, sir? So for your electronic goods, like designing of that panel, we need to check in the services which has been listed. So EOUN is SEZ. So these are governed by provisions of foreign trade policy. SEZs are governed by provisions of SEZ Act. Okay. No restrictions on EOUs can exist anywhere. So service unit, manufacturing unit. So EOU will be, the operations will be only with the service and manufacturing. Whereas SEZ, they can do service, manufacturing and trading. So then promoting. Promotion. One is duty remission and duty exemption. So duty remission, we had discussed, no, section 74 and 75. If the goods has not been used, 98% duty drawback. If it is used based on that concessional rate, either 70%, 75% up to 18 months. If the goods has been returned, or whatever the goods which has been imported returned, you can claim up to 18 months. Okay. Then next 75, manufactured goods. In duty remission, where the duty has been reduced. Whereas duty exemption, under this tax has not been collected. Duty exemption scheme enables duty-free import of goods, inputs required for the production and export of products. So my what the company set up is purely for the export. There is not even a single item is been used domestically. In that case, I can have duty exemption. Okay. Then export promotion of capital goods scheme. Capital goods can be imported without the payment of duty and then used in manufacture of goods. No question of refund of import duty. There is no question of import duty. So highlights, my first highlights of FTP is, so online approval. So I don't need to physically submit the documents. Now everything has been digitalized, and reduction in processing timing. So when you have approached the proper office, customer or custom office for any rulings, either you need to get your value or a rate to specify ascertained for the particular goods, the value has been reduced than the previous. So, so now before it was 3 to 7 days for advance authorization issuance, EPCG issuance, then 3 days, 3 days to 1 month, 3 days to 1 month. Now automatic route is processing is 1 day under FTP 2023. And MSMEs, reduction in user charges for MSMEs under advance authority and export promotion capital goods. Okay, application fee be reduced for advance authorization and EPCG scheme will be benefit for 55 to 60% of exporters who are MSMEs. And e-certificate of origin revamp. Okay, where you will get the e-certificate of origin, all the documents online. Then paperless filing obligations, so you can file your bill of entry and the import manifest, everything online, electronic filing. There is no necessary for hard copies to be submitted. Then rupee payment to be accepted under FTP scheme. Initially, we had only foreign currencies. Now, even the rupee payment also accepted in FTP scheme. FTP scheme, SEZ, sale to SEZ, EOU, right? Then effective step, okay, which is taken that in next 5 years to be 1 trillion, I guess. Yeah. The next is special one-time amnesty scheme. Okay. In order to remove the trade barriers, okay, so in the interest of the trade and industry, okay, in the interest of trade and industry and motivate the exporters, relief to be provided to the exporters who are unable to fulfill their export obligations, obligations against EPCJ and advance authorization. In that case, one-time settlement of default in export obligation by advance authorization and EPCZ authorization holders being introduced. Then all pending cases of default in export obligation of authorization mentioned can be regularized by authorization holders on payment of all custom duties exempted in proportion of unfulfilled export obligations, and maximum interest kept up at 100% of such duties shall be exempted. However, no interest is payable on the portion of additional custom duties and special custom duties. Clear? Like we had like amnesty scheme in income tax. Similarly, we have now in FTP, where at one-time settlement you can clear all your export obligations. Then it was available up to 30/9/2023. Cases under investigation of fraud and diversion are not eligible under this scheme. So this 5 years plan of FTP 2023 is one dynamic and responsive to emerging trade scenario, state and district to promote the exports from the gross routes. Okay. Now, example, if you go for Ilkal. Okay, so they're special with Ilkal sarees. So that to promote their uniqueness. Or if you go for Mysore silk example, in such case to promote their uniqueness, and they're promoting the export. Then focus on e-commerce exports to streamline processes and make it easier for export to grow in e-commerce space. sector-specific target to achieve the goal of $1 trillion, okay, merchandise exports by 2030. Consultative mechanism to resolve the issues of trade and industry, work towards making Indian rupee a global currency and facilitating international trade settlement in INR restructuring of Department of Commerce to make it future ready. Clear with customs and FTP. The small topic baggage. So please give your inputs on baggage. Baggage inputs. What is exempt? Because if you go for Cochin, in Cochin ports, there many officers will be there checking where they'll carry, import the gold, either in a paper manner or wearing the gold. So up to certain limit, my gold is exempt while importing, right? Or while departing from the airport, I should declare my gold, whatever I'm wearing. Individual belongings are exempt 100 grams. So no, sir, it's not 100 grams. If it's a male, 20 grams, female, 40 grams, 32 kgs import. Then custom duty is levied. 32 kgs. Yeah. Male 20 grams, female 40 grams, cap with 50,000, 1,50,000. Okay. So, baggage includes both types. So, one which are accompanied with me, or initial first I reach the port, and the next my luggage is coming. So after my arrival, my unaccompanied luggages. So if I'm vacating like from foreign, I was residing for 2 years on employment in foreign. So I'm coming back to India. My personal belongings and the items which I'm getting, okay, whether duty to be paid or no. Okay. It is a luggage of a passenger traveling by air or sea from one country to another country. It also means all dutiable goods imported by the passenger or a member of a crew in his or her baggage. Baggage includes unaccompanied baggage, okay, except where they are specifically excluded, but does not include motor vehicle. Okay, the determination of rate, the rate of duty and valuation, if any applicable to baggage, shall be the rate of valuation in force at the date of which the declaration is made. And normal rate is 38.5%, where my basic custom is 35% and my social welfare surcharge is 10%. So 10% is on my 35%, 38.5, and there is no additional custom duties or special custom duties. So exemptions. Exemption is my one laptop accompanied while I was arriving. In such case, one laptop is exempt. Ornaments limit is there. See, while going out of India, I was wearing my Mangalsutra. So while coming also same, the jewelry is with me, right? In such case, nothing. But an additional necklace or some jewelry which I am wearing, there will be a check on that. Okay. Infants means children not more than 2 years. Residence means the person holding a valid passport issued under the Passport Act and normally residing in India. tourist means not normally a resident in India who had come to stay in India not more than 6 months in the course of any 12 months period for legitimate non-immigrants purpose. Personal effects means and any personal belongings, but not including your jewelry. So there are exemptions allowed where if you are a first Indian resident other than you're traveling other than Nepal, Bhutan, and Myanmar. Okay. In such case, if you are traveling on tourism, then any items, other than on tourism basis, your personal belongings will be free. Articles other than mentioned in Annexure 1, I'll be discussing on that. So 50,000 limit is given, whereas you are traveling to Nepal, Bhutan, Myanmar. Okay, personal belongings are free, but land route, the land route, no benefit, but other than land route, air or flight, 15,000. 15,000 is benefit. Okay, up to 15,000 free. Where a tourist of foreign origin used personal free, whereas articles other than those mentioned in annexure is 15,000. If you are traveling to Nepal, Bhutan, Myanmar, no benefit via route via land. If other than land is 15,000. In fact, personal use no, but articles no benefit for infants. That is, they are of 2 years. So, Annexure 1, which includes firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, or cigars exceeding 25, or tobacco exceeding the 125 grams, liquor or wines in excess of 2 bottles. Liquor or wine in excess of 2 bottles, gold or silver in any form other than ornaments. Other than ornaments, flat panel LCD, LED, plasma televisions. Okay, where for this annexure 1, so if you are importing anything, okay, gold, silver ornaments other than gold bars, etc. Duty payable in the items covered is 100%. Basic custom duty will be 100%, and on that 10%. So total will be 110%. Then jewelry, ornaments, right? If gentleman passenger means up to weight of 20 grams, value cap of 50,000. If 20 grams means now today it is 1,25,000. Example. So my value, it is up to 20 grams. You are okay. But my value cap is 50,000. So balance on 75,000, I need to pay the tax. Tax at 35% plus 10%. I'm saying jewelry. Okay. Whereas if you import illegally, as if making as a paper, keeping in between the papers, okay, or any other way, in such case, 100%. Annexure 1. Your annexure 1 is your gold and silver. Any other form. In any form other than ornaments. Okay. This is my persons and goods baggage rules. The person returning from other than Nepal, Bhutan, and Myanmar, returning from other than the countries and that country, professional returnings to India, tourist rule, jewelry rule, and transfer of residence. Clear? So, what is the deemed export? So, deemed export, as per my FTP policy of 2015 to 2020, when any supply is made against the advance authorization or supplies to EO, STP, BTP, etc., or supplies against TPCG authorization as such, supply to projects against international competitive bidding, supply to projects where imports permitted at zero custom duty, supply to mega power projects, and supply to UN international organizations, or supplies to nuclear projects are known as deemed exports. For this question, can I get the answer? Compute the customs payable baggage rule. So after 10 days, I'm returning back from England. Answer, no duty. What is my custom duty? So any other mentioned in my annexure 1, like cigars, anything. Other than that, I'll be paying that 35% basic custom duty on add-on plus social welfare. See, 1 liter of wine. So up to 2 liters, that 50, under 50,000 exemption it will come. Up to 2 liters of wine. If you are taking third one will be taxed at 100%. Is on only duty, no import took place. Yes, I'm not saying import. Import is it comes when you're doing business. Baggage. As per my baggage rules, I'll come again. See, rule 3 tells me, rule 3, when Indian resident, a foreigner residing in India, or a tourist, when I'm a tourist, okay, the personal effects are nil. Any articles other than annexure 1, I will get up to 50,000 exempt, right? Benefit 50,000. So, what they have given liquor or wine in excess of 2 liters means if I have purchased 3 liters, then in that case 1 liter will be charged at 100% custom duty. For 2 liters will come in a cap of 50,000. First, yes, Mr. Nirvan, an Indian resident aged 40 years, returned to India, okay, on 10 to 2023 after visiting England. He had been to England on 1st Feb 2023. On his way back to India, he brought the following goods. So, what I can say? 1 second. So first, personal effects like clothes valued to 2 lakhs. So my personal goods value, I'm calculating the value. It is 0, nil, right? Even though 2 lakhs, nil. 1 liter of wine. So I'm not purchasing excess of more than 2 liters. Okay, 1 liter of wine. It is of 10,000. So next is sound system worth of 50,000. Now you tell me, do I need to include this? I'm buying other than the annexure 1, right? Sound system is of 50,000. Next, a mobile laptop is exempt. One laptop is exempt, but not a mobile. Mobile, it is 20,000. So total value 80,000, clear. And my free limit, since I'm traveling to other than Nepal, Bhutan, Myanmar, free limit is 50,000. So balance is 30,000. On this BCD, basic custom duty, at 35%. Then social welfare surcharge, 10%. Total is 11,550. Clear with this? Yes. In exam, an MCQ can be asked similar way. Okay, the answer is 11,000. Okay. Now, question number 3. Please answer question number 3. Annexure will say that 100% of BCD is applicable only when you are purchasing more than what wine. That time 100%. If you are purchasing less than two bottles, that time it will come under 35%. Option D. No duty. Yes, option D. Since I'm getting only one laptop for my personal use. Question number 4. A. 4. Please. How? It is capped. I told no. I'm purchasing 20 grams of gold. If I'm Mr. A, man, 20 grams of gold. Then capped with amount of 50,000, 1,20,000, 125, 75. 175 I'm liable to pay duty. Yes. Option B. Option B. Option B. It is capped with, please, the gentleman is traveling where he's purchased, even though it is less than 20 grams, but the value capped is 50,000. Okay, the value is 55,000, right? So on additional 5,000, I need to pay the tax. So my tax will be on additional 5,000. Minus basic limit, free limit. On this, 35% will amount to 1,750, 10% on the BCD will be 175, total 1,925. Option B. Clear? Clear with the concept? Yes, 1,925. Yes. So that comes to end for the class. Customs merged. So morning session and today's session file is shared, and even it will be shared from institute side.
You can download from the drive link wherein Madam has given entire 3 topics material. It has been already placed in your drive link. You can download. So what is the usefulness of the class, especially the foreign trade policy and the customs act? Can anyone text in your box? Why we have to understand the intricacies of these 2 laws? Indirect taxes, part and parcel of Indian indirect tax, refund under GST law, applicability IGST and new amendments, customs and GST correlated, dating is the most. So, Madam's classes are very useful to you. Thank you, Madam Ji. They are giving good feedback. procedure of imports and export. Yes. Okay. Okay. Ravan Siddhappa sir, do you want to talk?
Yes, sir.
You can.
Sir, some more example is required, sir. With the-
Okay. 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 That will be taken up, not an issue. For the time being, just we have kindled with these examples. Once you get the study material, I think you might have been already communicated. The exhaustive details have been placed in that one also, sir. Anything in the next classes, we will come back with. No problem.
Sure.
Continuously, these programs will be there even once you become qualified. Pannir Selvam, sir.
Sir, good evening, sir.
Good evening.
Sir, the Skill University not open, sir.
What username and password you tried, sir?
So many times I will try, sir. I can't.
Okay, you get tomorrow, leave tomorrow. Monday, by Monday, I will individually give the time.
Yes,
I
sir.
will sit in the head office to resolve all these things.
Yes, sir.
We will settle all those things. Don't worry, sir.
Thank you, sir. Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir. Vignesh,
Evening, sir.
yes,
Hello. Good evening, sir. Can you hear me, sir?
yes.
Yes, sir. Sir, regarding customs, we are having inspections on the port. Even though it is a airport and or be in a or in shipping, sir. But how certain things are happen, sir? Even though we are having good verification and good things, all the things, cross verification also, sir. Certain things be unacceptably happen, but I can't understand, sir.
Whether you are making a complaint or a compliment.
No, sir, I need a compliment, not a compliment.
Why? Whether you want to make any experiment and any adventures.
No, sir. I am having existing experience, sir, in this scenario.
But you know, no. We are not getting what actually the question is. Whether you are asking with all these things, how the things are coming into India,
No,
or
sir.
how we have to go with
So
what
my
actually
question
your
is, we
question
are
is.
having bill of lading. That is very important, sir. Each and every cargo bill of lading is very important.
Okay.
So this bill, before this bill of lading and after this bill of lading, they cross verify all the things physically and electronically.
Bill
Both.
of lading is applicable only for the export. Bill of
Sir,
lading.
that's pure.
When bill of
Yes,
lading
sir.
will be issued? When bill of lading is to be issued?
So
Once it
momentum of
crosses
goods.
the custom frontiers, no. Bill of lading will be issued only when the custom frontiers of that country crosses. When it
Yes, sir.
comes into the international water, then only that bill of lading will come. So within the inland water, what we call it as the
Inland
nautical
transport.
miles. Not inland transport is quite different, but the custom frontiers, there are custom frontiers. So you are telling bill of lading will be issued for exports.
Yes.
Then what you
Yes,
want?
sir. We mentioned all the things in this bill of lading, sir.
Ah,
So certain times what happen means, in spite of inspection,
Hmm.
so the weight may be less or high. So we
yes.
be fined, sir. Even though it
Abnormality
be less,
there.
also fined.
There will be a leverage given in every aspect. There will
Okay, sir.
be what you call it a moisture, loss of moisture, dampening, all these things will always be there in every
Okay,
this
sir.
type of physical nature of the goods. Once if it is
Okay, sir.
abnormal, definitely that will be no, because when you are there is a scope for suspicion. That's all now. Law should
Yes,
be
sir.
very stringent, otherwise nobody will adhere to it. If
Okay, sir.
everything is
Okay.
given as a take it for granted, people will do only mischiefs. Why the law is required then? The law is required
Yes, sir.
to
Yes, sir.
stop somebody making their gains out of selfishness. That's what actually the main intention of the law.
What happened previous year means we import the onion from Nigeria, not Nigeria. We import the onion from country. But what happened means it was rapid. That also at the point of time we got the fine, sir, from the shipping month.
Mm, mm,
Importing the onion.
mm. What is their contention?
So, so their contention is importing the onion and take it into the market.
Ah,
So onion we kept only normal temperature, not in a cold storage.
okay.
What happened means onion
It
was
was
rapid.
rotten,
Rapid means
rotten.
rotten.
Okay.
So this point of also time also we got the fine
Whether
from the shipping.
whether you have kept it in the ICD only,
Yes, sir.
whether the same things have been kept even in that port area only, or you have brought it from outside or kept it in the inland container.
No, sir. It tightly packed in container, sir.
Okay.
Only we opened at the time of container in the harbor, placed in the harbor. That time they have to inspect what the items, goods are inside the container.
Whether
So
so you have imported the onion wherein the received condition is of the rotten stage.
rotten stage, yes, yes, sir.
Oh, so then they find you.
Yes, not find me, sir. The client was fined. I am doing supporting only
Somebody-
insurance for marine.
Somebody is fined, no?
Yes, sir.
Okay. Why? Just you put your thought process. Why they are fined? Why they are fined?
Yes, sir. Yes, sir. Yes,
No,
sir.
you tell me why they are fined.
Sir, that I don't know, sir. Because the same
That you have to
weight is
understand
same.
why they find is because when you brought some vegetables, onion is a vegetable, it was brought without taking care of how it has actually to be received here. Once it becomes rotten, who has to bear the garbage? It has become a garbage. So where the garbage is to be dumped then?
Okay, sir. Okay.
All these things has to be taken into consideration. Okay. Who is this
Yes, sir.
admin?
Then
Huh?
I don't know, sir.
Mutturaman?
Sir, good evening, sir.
Good evening. Yes, please.
Sir, my password is locked, sir. Your
Password is
send
locked.
is my password, sir. My mail ID. I was reset password. Some locked. Please resend, sir.
Okay. In the morning, I opened and given you, no? Shared the screenshot also.
Okay. Thank you, sir. Thank you.
Okay. That I will see them. Okay. Who is this admin? If you enter as admin, Zoom user, Redmi, okay, Samsung number, any fancy, all these things. Okay. Who is this admin? Monday, we will settle all the issues of Medhavi Skill University study material. Don't worry. Okay. Rajshekaran sir. How are you, sir? So you are sitting in seashore only.
Good evening, sir.
Good evening.
Excellent section. Thank you so much for your super
Madam,
effort, sir. Thank you.
all credit should go to madam only.
Yes, sir. Definitely. Thank you so much, madam. Extraordinary explanation. Your kind teaching is very well, sir, madam. Thank you so much, madam. Pooja, madam, thank you very much.
Thank you so much.
He is a cost accountant, madam.
Okay, sir.
He is a cost accountant, Rajshekaran from Chinnaselam.
Okay.
Every day he takes 33 minutes class.
Okay.
Morning 11 to 11:44.
Please give your blessing, sir.
Okay, anything? I think we have attended everyone. Okay. So shall we close today's session? Shall we come up tomorrow with a new topic called the direct taxes? Okay. Thank you, Madam Ji.
Okay, sir.
Okay,
Thank
sir.
you.
Thank you so much,
Good
sir.
night. Good night, one and all. Thank you, Madam. Namaste.